Today we're talking about real estate and Bitcoin. While they seem like an unlikely pair and almost like total opposites, one's built on physical property and the other lives entirely in a digital space. But here in California, a state known for tech innovation and high-value real estate, we're starting to see a growing interest in how these financial worlds can interact. Let's start with the idea of buying property using Bitcoin. In some cases, sellers are open to receiving cryptocurrency as payment, often alongside traditional funds. While most real estate transactions in California still rely on US dollars, fiat, to complete escrow, Bitcoin can sometimes be used as a part of a broader deal, particularly in private or peer-to-peer transactions. That said, every transaction is different, and how or whether crypto is involved often depends on the comfort level of the buyer, the seller, and the professionals involved. More often than not, we're seeing Bitcoin used around real estate, not necessarily as direct payment. For example, some investors are using their gains from the sale of Bitcoin to help fund real estate purchases. They might sell some crypto to cover the down payment or diversify their portfolio into rental properties. There's also growing curiosity about using crypto-backed loans, where Bitcoin acts as the collateral for financing, but these products are still developing and not yet widely available. Behind Bitcoin is blockchain technology, and this is where things get really interesting. Blockchain offers secure, transparent record keeping and opens the door for smart contracts, digital agreements that execute automatically. While this technology isn't yet part of standard real estate processes in California, it's being explored in some cities for tasks like verifying ownership or simplifying transactions. It's something to keep an eye on as innovation continues. Then there's tokenization, which is gaining attention as a concept. This involves turning ownership of real property into digital assets, kind of like shares, that people can buy and sell. The idea is that it could one day make real estate more accessible to smaller investors and bring added flexibility to how people invest in properties. While this is still gaining traction and it's still a developing space, especially in the US, it represents a broader trend toward fractional ownership in digital investing. It's also important to understand that cryptocurrency carries tax responsibilities, and using or selling Bitcoin can have financial consequences. If you're considering using crypto in any part of a real estate transaction, it's a good idea to work with a professional, financial advisor, agents, tax specialists who understand both markets and can help guide you based on your unique situation. Looking forward, Bitcoin and real estate may continue to overlap, particularly in high-end or international markets where buyers value speed, privacy, and flexibility in funding options. Bitcoin and real estate may continue to overlap, particularly in high-end or international markets where buyers value speed, privacy, and flexibility in funding options. Whether you're a property provider, buyer, an investor, or just staying informed about these trends, it can help you prepare for what might come next.